Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get things started this week, let's talk a little bit about what's been going on in the markets.
Yeah, if we start on the cattle side this week, live fed cattle were down a little more than $2 for the week, and those feeder cattle markets were steady to $7 lower this week. On the future side, the August live cattle futures contract was up slightly, while the August feeder cattle contract was up a little more than $3 this week. On that choice box beef price, we were down about 80 cents this week as weakness in briskets and rounds offset some strength in some other parts. On the hog side of the equation, cash barrow and gilt prices were down $1.60 this week. While that July lean hog futures was also down for the week, down $2.35. The pork cutout value was basically unchanged this week. We got weakness in bellies and ribs, really offsetting some strength that we saw in ham markets this week.
Scott, as we take a look at the hog side of things specifically, we saw a pretty sharp run up in prices as we got further into the African swine fever concerns. We haven't seen necessarily that demand come to fruition as we might had expected. But are we also watching how those prices are coming back down? Because they seem to be coming back down a little bit at a little bit more regulated pace opposed to a sharp decline like we saw that sharp increase.
Yeah, so I still think when you look at China and the ASF issues that are there, a lot of folks are now realizing that, number one, the Chinese slaughtered a lot of hogs probably early on in that process. So they are working through a lot of stocks of cold storage of pork at this point, but that at some point in 2019, that can't go on forever, and there'll be some additional demand, and hopefully we get a part of that. And so I do think markets continue to feel like there's the possibility for some stronger hog prices as we go. And again, I think we'll just have to wait and see on ASF, as you and I have discussed several times, to see its true effect. But when you see the kind of cuts happening in the Chinese sow herd, you know that's going to have some effect, I think, at some point down the road.
And at this point, you're not even just seeing it in China. We've seen it spread through a lot of Asia and a fairly large operation in Poland. It was found this week as well. So I think that are those countries in that part of the world getting a little bit more nervous as that disease spread has not slowed?
Yeah, absolutely. I think you're seeing more concern. And I believe now we're beginning to realize, so this isn't just going to be a 2019 issue. Getting all of this under control is going to take time. You're probably 2, 3, 4 years down the road before you can get all of the issues related to ASF outbreaks that we see today maybe in better shape. And who knows how far that spread goes. So I think we're getting a better handle on, we're in this for the long haul before we get a lot of this turned around.
USDA revised its export values for livestock, dairy, and poultry this week. As we take a look at those, let's talk a little bit about how much it's changed and what are some of those contributing factors.
Yeah, so if you look at that overall ag trade outlook provided by USDA on the livestock, dairy, and poultry side, they did lower that by $500 million. Now that's for fiscal 19, the year we're already in, by the way. So they are seeing some weakness. Beef and pork are really both showing some lower value as we've started 2019. And that has a lot to do, I think, with some of the reductions that we see in that USDA report.
Monthly trade data also out this week, and we've seen some changes in there as well.
Yeah, so we want to pay attention to what we're getting out of these monthly trade reports at this point. And I'll start with beef. If you look at April numbers, USDA suggesting we're about 3% below where we were a year ago, about 81,000 metric tons of beef that moved out of the United States. We're now seeing multiple months here where we're below a year ago levels. I'd always like to remind folks that, 2018, you and I talked a lot about the growth we were seeing every month, and now that helped beef markets. You can't get off that treadmill. You need more growth going forward. Even stagnant doesn't do it. And when we start the year with some lower numbers, that doesn't help us. So 3% lower on beef, 4% lower on pork. And again, this is for April. When you look at the pork side, Mexico still stuck out as one of the countries with things with trade to Mexico down relative to year ago levels. Even on the chicken side, so total chicken exports about 6.8% below year ago levels. So not a lot of good news in total out of that April set of data.
So those are the numbers for April. Since then, we have seen those tariffs with Mexico and the whole, I guess, the root of the trade war, part of the root of the trade war with Mexico. We've seen those tariffs drop. We've seen the tariffs on U.S. pork be taken off, and we should see those in the next month. But we're now coming into June, and the administration has threatened tariffs on goods coming in from Mexico again. How does that potentially impact what's going on with our exports to that country there?
Yeah, so we offer a lot of uncertainty again, I guess, in terms of what happens. You know, I look at ham values out of that pork cutout value this week that were up and stronger as some indication that we were getting more product maybe moving to Mexico as a result of getting rid of tariffs. If we come back in June and talk about Mexico then putting new tariffs back on things like U.S. ham going to Mexico, that growth might be short-lived and be somewhat of a drag on ham prices and more importantly, pork prices in the United States. So we'll have to wait and see what happens. We don't know exactly what Mexico is going to put tariffs on in terms of if they retaliate relative to what we're suggesting. And by the way, those are going to ramp up, you know, month to month. If the tariffs we're suggesting go into place, I wouldn't be surprised for Mexico to also then stair-step theirs up in a similar fashion. So they'll become more biting over time as well, I guess, is the point that we're going to have to pay attention to.
Demand is the one thing that we keep talking about that is important, not just global demand, but domestic demand as well. A jobs report came out today. Talk to me a little bit about those numbers and how does that potentially impact the domestic demand situation?
Yes, well, so first of all, I'll say we added 75,000 jobs in May. We'll take that as the positive part of this. Unfortunately, those 75,000 jobs fell well short of what many economists thought was going to be 180,000 job gain in May. So not some of the best news in terms of jobs. It does, again, start to point to me that got a few signs that domestic economy's maybe slowing a little bit. It also got some revision downward in some of the previous months as well that doesn't help the situation. So that jobs report, again, I worry about how that translates into meat demand here in this country. We'll have to continue to pay attention, but not the best news we got out of that report this week.
The hits keep on coming. We've been struggling to get this corn and soybean crop in the ground this year. As the livestock sector takes a look at where planting progress has been and some of the conditions of the crop that went into the ground, what are some things they need to think about as we think about input costs and feed cost preparedness?
Yeah, well, so I think you and I have talked a lot about how to protect against feed costs. And, you know, if we just rewound 3 weeks ago, we would have probably been talking about corn prices that did nothing but try to move lower because of what was going to be strong acres. And if we had average yields, another big crop in the bin. That's changed a lot in the last few weeks. You know, number one, we know we have some areas of the country that just aren't going to get planted to corn. I can take Missouri and the flooding on the Missouri and Mississippi rivers likely doesn't get off ever in time to think about a corn crop, let alone planting anything in some of those acres this year. So I think we've already seen markets run up, especially for corn. You know, if we looked in the latter half of May, we probably got about an 80-cent run up in corn prices on the futures side as a result of a lot of that planting uncertainty. Yields still, to me, are the big issue. And we're early in the season. We know we have late corn. We aren't sure, I don't think, because we haven't really had this situation for a number of years where we've been quite this late. So we don't know how many of these corn varieties are going to work in what's a very different year relative to what we've seen for a few. I just remind us that if we talk about acres, and we'll see what USDA does in terms of WASDE report that we get next week, as well as we're going to get closer and closer to that June 30 acreage report as well. If markets all of a sudden are giving a surprise that maybe there's more acres of corn than they would have thought, and we get corn prices moving lower, I might suggest to livestock producers it might be an opportunity to lock in some of those corn costs, just in anticipation of what's going to be a lot of discussion between now and when we harvest that crop in terms of what happens on the yield front.
And to throw one other aspect of that in too as well, I think about hay and forages, and there's been a lot of deterioration of those crops early on with this wet weather pattern.
Yeah, absolutely. I don't know anybody that's told me that they've put their hay up without it getting rained on at least once so far this year. So lots of rain, good green growth, but it's been hard to get any hay put away. And we know we already started with some of the lowest stocks in decades on the hay front. What happens from this point forward? You know, is this kind of wet weather trend going away and we're going to move towards a drier trend? You know, none of us know exactly what the weather will look like, but if we all of a sudden turn into a no rain and 95 degrees, we know what that's going to do to us as well. And so that yield uncertainty, whether you're talking hay or corn, for example, certainly means we have to be paying attention to that feed cost side of the equation right now.
Scott, that's it for us this week. As we look ahead to next week, what are some reports that we will be talking about then?
Yeah, I'm really curious to get USDA's next WASDE report out on Tuesday to see what they are going to do in corn and soybeans and adjustments to yields and maybe harvested acres in some cases. We'll get retail prices out midweek for meat products and in the week on consumer sentiment.
Sounds good. We will talk to you next Friday. Have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.